The Fed is still trying to use tools in its toolbox. And Steve Liesman is here. He's got more on what's happening on that front. Steve.
Yeah, Becky, good morning. It seemed on Friday, every half hour or hour, the Fed came out with another program. It also came out with some additional programs over the weekend. Let's go through what's going to happen today, because it is another historic day shaping up for the Federal Reserve. Let's start with the idea that they're going to be buying today $40 billion of mortgage agency mortgage-backed securities and $75 billion of treasuries. By the way, they pledged last week. This week, they'd be buying $100 billion of mortgages. Over the weekend, Treasury Secretary Steven Mnuchin said there could be up to $4 trillion of liquidity from the Federal Reserve. No actual details on that, but you're seeing some of it. The Fed's money market liquidity fund opens today, and not a day too soon here. And finally, on Sunday, the Fed said, hey, banks can restructure debt with their small business owners or their creditors or their borrowers and bring it to us at the window. That's important. But first, let me give you a taste of what's going on. J.P. Morgan writing over the weekend, quote, money markets are under extreme stress. The rollout of Fed facilities may help. A lot of damage has been done to the retail prime funds and ultra-short ETFs. We'll see if today's opening of the money market fund, where banks essentially act as conduits, they take paper from the money markets, bring it to the Fed for financing. We'll see if that has any help. Over the weekend, as Joe was just talking about, Neil Kashkari, the Minneapolis Federal Reserve president, talked to Scott Pelley. And what I found most interesting was what he said, what else the Fed could be doing here.
Some people have suggested that we should be providing more support directly to the corporate bond market, and I'm sympathetic with those views, and also the municipal market, making sure that states and cities are able to access the capital markets as well. So there's a range of things that the Federal Reserve could do, and we're far from out of ammunition.
So the idea that they'd be buying corporates and munis would be very, very new. We'll see if the Treasury uses some equity to protect the Fed's balance sheet in that regard. One more thing, guys. The Fed issued this guidance over the weekend, basically telling banks, hey, work with your borrowers, work things out, and we supervisors will not look down on you for that. We'll not penalize you for that. But also importantly, they said, if you work these things out and bring them to us, you can finance those loans, those restructured debt at the window. Guys, it's not going to be any silver bullet here. That's been clear for a couple of weeks now. It's going to be a series of actions by the Fed, by the fiscal side, and we'll see finally at the end of the day if some of these credit markets start to operate more normally.